So, uh, it's currently 30, 13? No, 30. Yeah, 30. 30th. I know. It's the last day of April, as we can see. It's Tuesday. And I'll be doing the recap from the past week, from Wednesday 22 to 26th as the trading days, or from Sunday 20, 21/21st to the 27th. Those will be my review, as we can see right here from April 21 to 27, which was the week 4. So week 1 for April, week 2 for April as studied from the eye of the currently the April eye of the month. So April eye of April in this case. To then week 3 being the low of the month. And now the week 4, which was the past week, where price traded on the upside into this fair value gap. But basically, we had a accumulation, expansion, and our price is either retracing to then continue or it's going to reverse. Because that's the funny thing. I'm just going to talk a little bit about this because I was thinking today, listening to an ICT podcast, because I'm not in the trades. These past days, I'm going to show you opening. I think that I have the, yep, not good to show this because those are my accounts and things like that. But if you check my trading journal, I've been out of the charts for like 2 weeks almost, and I've been very bored in trading. Like I can't put myself into doing tasks, and I'm being I'm going to tell you something which is important, which is if you are procrastinating in something, it's not because you're lazy slash and this is discipline, but it's because you're bored. And if you like me, you have been studying trading every single day for the past, I don't know, like studying a lot from 2022 to 2023, mentorship notes as you can see right here, you know, videos from ICT, back testing, from all of this time, as we can see, it gets not super, but it gets boring, So I'm not taking a break, but I'm procrastinating, not doing what I've been doing, what I should be doing, putting my tasks, like delaying my tasks. And I know that it's not a good thing, but I'm also not putting a gun into my head and saying, "Oh my God, I'm dead and I'm dead." Yes, I feel bad sometimes for not doing the things I should be doing. Yes, I want to have success on this not to be wasted, but I reached a point where I got so bored, so so bored and things not going my way, other things happening outside of the chart on my life that I've been liking, that I have been liking. So I don't want to sound like I'm excusing myself or I'm just justifying my mistakes because mistakes shouldn't be just justified. Yes, a mistake happens because you lack knowledge or you lack something, but you should never just justify why you failed, But I'm not mad at myself, and I just want to slowly get back the flame to study, and that comes with time, and that comes with outside other goals and things like that. Because right now I've been very bored, but I've been disciplined enough to make these tasks even if delayed. I could just completely ignore and quit, or oh, I'm bored, I'm not going to look at chart for 3 months. No, I still want to have. some touch on this, something to hold, something to study and find myself in. But it's actually pretty hard because it's getting pretty boring, and that's why trading is not how the it's not how uh, Instagram and social media and other traders make you believe that it is. If you have a model, and if you have not model, but if you have a framework, because I myself I don't believe that I have a model. I have a framework that I like to use, which is my weekly candlestick trading, and I have that framework. It's not a model. It's not like a strict model where I need to see a 4 hour buy side pull taken after a 1 hour fair value gap we form to then I enter on a 5 minute order block. Like it's not strict, it's flexible, it's a framework, it's changing not every time, but it's changing a lot from X to B and to from X to B, from A to Z, and it's always changing. You know, that there's something that changes, something that get added on, something that get deleted. But the framework, the base is always the same. Is a steady base on the market efficiency paradigm and market delivery stages from accumulation, manipulation, from accumulation, expansion, reversal, or retracement. Those price delivery uh, candidates, if, if I'm saying correctly. Let me just close this. So yeah, that's I will have to cut that after, but I've been pretty boring, bored with trading. Really, really bored. Like I'm not finding myself the energy, and I'm being also failing. So that is also a very important aspect. But doing the recap, what I was going to mention, it's like I talk about the week one accumulation, manipulation, reversal, like expansion, and now potential reversal retracement, which is sometimes, not sometimes, but this is our market books, right? Is that everything is that price delivery, right? That circle that ICT mentions, right? Of accumulation, expansion, or reversal, it's how price works, and it will never change. So let's imagine that we have accumulation, expansion, reversal, then continue, right? This is an easy, market profile. We have accumulation, expansion, reversal, retracement, to then continue on downside, right? And this is an entire market delivery, right? From the accumulation phase to the manipulation phase to the distribution, or from the manipulation phase from the expansion to the reversal. Now, what I mean by let's go deeper is that inside of an accumulation, there's an expansion. Inside of a expansion, there's a reversal. So what do I mean by that? Let's go deeper into this accumulation phase. Not let's go deeper into the accumulation and expansion, right? Because they are always linked together because an accumulation starts an expansion and that's basically it. So let's study this phase right here. In this phase right here, what we need to have accumulation, we have to have an expansion. So let's now imagine that this is the high time frame picture, being this accumulation, expansion, reversal, and now that. Let's imagine that inside of this we need to come from an expansion to then price consolidate, right? And we have a consolidation, which then creates the expansion. So what do I mean by this? So we can see right here the accumulation, and when you can see accumulation, we need to have an expansion. So instead of this leg higher, right, being the expansion reversal, this leg lower is the expansion, the low time frame expansion, the pre-manipulation before the real manipulation, right? So we have accumulation, manipulation, and reversal. So this reversal right here, right, this turtle soup, right, this turtle soup right here, same here, is an high time frame expansion, right? And then this reversal right here, many times is a low time frame expansion, right? Like let's now talk about this reversal, right? So we have price, we have the accumulation, right? We have the expansion. Many times right here we have something like this before going lower, or sometimes either different. Either we have equal lows created, another leg higher to make this high, and then go lower. And what we have right here, we have the accumulation, right? Accumulation phase, accumulation high taken slash range high taken, expansion lower, retracement, expansion. So instead of having the reversal at this point, because after the reversal only comes two things, right here we can see that after the expansion we had a retracement into a premium array to then continue lower. So that's just a quick study that sometimes an high time frame reversal is a low time frame expansion, as we saw, accumulation, range high taken, eye of expansion end made. Now high time frame reversal start, which is a low time frame expansion start, expansion, retracement, and continuation lower. That was just a quick note that I want to make. Now studying the past week, each this is this small candlestick around, not small at all, but around 130 29 pips of movement, creating these head and shoulders after reaching into a discount of this current range. So price didn't below a low, right? Everyone wants to short this right here as that breakout after the high made on the past week on Thursday, if I'm not wrong. Yes, sir, I still remember. After the week 3 Thursday high, uh, and then immediately after the week 3 high second, everyone wants to short us that breakout, but they forgot that we are currently in a discount, so price is likely to trade higher. Now to where? I can't be sure. I can't be sure. I believe that lower prices are going to be seen, and indeed, this range low, this 2023 low is going to be taken as my as a possible DXY 2023 high to be taken, right? So we want to see this energy match, right, where DXY goes to the 2023 high and the EU goes into the 2023 low. So that would be a synced inverse correlated market structure. But because we're in a discount, it's more likely to see higher prices, even though that high time frame indicates lower prices. So this is why the breakout didn't work and price retraced into this premium of the previous candlestick, right? We can see that the week 2 range price exactly traded into accumulation. So what I can see now, I will at least expect price this week, if I clean this, to possibly go into here or just respect and then go lower as this fake head and shoulders pattern. I would like to, low time frame head and shoulders, I would like to see it traded too. That will be my idea. But right now we are just, as we can see, after a big candlestick, price right now accumulating, generating interest in both sides before going into a clean direction. But as we can see, we have price trading, respecting the week 3 low, which was the low of the month. So this was the second change set of delivery on the monthly candlestick, right? Making the monthly low. And then price traded on the upside, right back into right back and above the previous week high, which was the week 3 high, and then into a premium slash discount, premium slash equilibrium of this currently dealing range. On daily chart, what can I see? We can see that we have a Monday low and a Friday high of a Monday low of the week and a Friday high of the week, and that's not really something that happens a lot, right? And you might be asking, if you are watching this till this point, why are you not talking about the weekly candle, like the usual document that you pull up and you mention things about it. Because I have no notes for this week, nothing. I was, if you remembered, it was Thursday, and not. I think it was Thursday past week that I was making the recaps from another weeks, so I was pretty late, and I'm not sure yet if I'm going to make the usual notes that I make on my notebook, right? Because I completely didn't watch anything this past week. I'm being serious. I opened the charts, but I didn't watch nothing. Nothing. So that's why I don't have any notes, any context to give you. Just going to give you a 9 analysis, which isn't the best, right? It's not ideal, but it's all I have for you and for me, basically. I can't tell you, yeah, I was looking at this. I was not. This is just hindsight. It's like the bare minimum. And when things are not doing the best, it should at least do the bare minimum to stay above the water with your head above the water breathing, right? So as we can see, what as I can see, we have this previous week three from the Tuesday from the Tuesday to Thursday, making the dealing range. I'm going to delete this fair value gap. And everyone after this I was made was either wanting for price to trade higher to short into this breakout, right, like support broken, now used as a ceiling, or they were viewing this as the eye, and now price was going to trade lower, and everyone wants to chase this like lower. Wrong. Why wrong? Because from the inception of this move to the low, price is in the discount, and it usually never goes into external range liquidity without going into a premium, in this case because it's bearish, into a premium discount array. And as you can see, price, the only signs of a potential reversal was this Friday, where Friday created this bearish candlestick closing below this one, which can indicate that the order block has been formed and that lower prices can be seen, right? But the whole idea of higher prices, lower prices, the whole idea why this week was a bullish week, basically, was because everyone wanted to short. And why? Why did everyone want to short? Because retail wanted to short. Smart money didn't want to short. Right? Smart money at this low, at this small candlesticks, even though that we have these equal lows, these low resistance liquidity runs, it's not going to short because we are in a discount and because it needs to generate more interest. So everyone that wanted to short got stopped out right here. Everyone that wanted to trade that usually pattern of Tuesday trading into the previous week high to then go lower was completely taken out of the marketplace because that was not the week for that. And you can always go to the news. What we see on the news? It's not the week to trade like that. First, Wednesday has no news, which is kind of strange. Tuesday has a lot of news, which we can see that was used for expansion, right? Monday accumulation, Tuesday expansion, and then after the expansion only comes two things, right? A retracement or a reversal. Do we expect reversals with no fucking news? No news. Sometimes Wednesday creates day of the week, especially on especially on FOMC and late reversal weekly not presets but templates. But are we expecting after a big fucking large day? What to expect after a large range day? Small candlestick after. No news. Big fucking candlestick. At the sell side liquidity. At our target, which now every fucking retail trader is looking at this figuring, okay, this is a ceiling now, and support broken, resistance now becomes resistance. Everyone is shorting. after Tuesday was traded and made this candlestick, everyone on Wednesday was selling. And what we got? We got a small candlestick, expansion retracement. For Tuesday, with the news to create another leg higher to give that idea to. So if you are wrong, you are already stopped out on the short. But if you are right, you are euphoric, and then it creates this Friday eye of the week to then create the second reversal of the week. Why are you mentioning second reversal? Because this is the weekly candlestick. Imagine this as I'm going to make it white as my chart colors, so there's no problem. Default down close. Up close candle. So what can you see? This is a weekly candlestick, but on the daily, as we can see, this was the first weekly change instead of delivery to make from the opening price on Monday, from the opening price on Monday to so opening price to low. Open low was the money weekly. So this discount week was the Judas swing for the week. This is the Judas swing for the week. Weekly manipulation. Because there always a manipulation for the week. So this was the weekly manipulation. Open slash open low. Let's usual swing. Open low. Expansion. Then second change instead of delivery. To then close the candlestick. Right, because a candlestick has always four things. An open, which has a fixed opening time. A low or a high, depends if you are expecting a bullish or bearish candlestick. And that's why the first things after you decide if the week is worth it trading or not is where is the candlestick likely to go, right? The ICT mentions to not expect where the close is going to be, and I do not expect where the close is going to be most of the times, but I have to know if I'm expecting a bullish candlestick, because if I'm expecting a bullish candlestick, then lower prices on the start of the week, I looked at those as a manipulation. Because if I'm expecting a bearish week and I see bearish prices on the start of the week, that for me either is not the same thing as repeating again. If I'm expecting a bullish candlestick and I see lower prices, I see that as a positive for me, right? For my model. Because okay, I know that usually the week starts and fakes traders before going in my desired direction. As you see, we had the Monday with a bearish candlestick before then price going on the upside. But if I have a bearish candlestick and immediately we see lower prices, I can either see that as a warning sign of either two things. Either the week is very, very weak and price is going to continue go lower because everything is weak. We're going to have a fucking weak a bearish candlestick and price is going to go lower and lower. Or I'm wrong. Or I'm wrong. And then, and what am I wrong on? On the expectation of a bearish candlestick, where indeed it's a bullish candlestick, or in the weekly profile, because sometimes the weekly reverses not on Tuesday or Monday, right? In this case, the Monday low was made on the low of the week was made on Monday. Sometimes it's made on Tuesday. Sometimes it's made on Wednesday, and then the Friday high. That's you have to study that, and you have to watch what kind of weekly profile. That's why sometimes you also have to have in mind what type of close are you expecting, because expecting a range candlestick like this it's not the same thing as expecting a trending candlestick like was on week two, right? So I think that this is also basic. everything I have to talk right here because I have no other context that I can give you as someone who wasn't too deep in the charts this last week. And I'm making this to have this done so then I can open this new week and stop with these delayed tasks. And that's basically it. These lines right here were the study on the past day, on the past week, where you can see the 2022 model. Buy side pull taken, order block, lower prices after buy side pull, and where do you sell your sell order. So if you have a short, where do you sell it? Two options, either at the range low, in this case it will be right here, being the best case scenario, or a low hanging fruit. What is a low hanging fruit for a short? It's a discount of the expansion. We can see accumulation, expansion. After expansion, what we have a reversal or a retracement. So if you're expecting a retracement and you are selling it, then sell and expect a discount. That's why the 2022 model teaches you to sell into a discount and to buy into a premium, not into the old low, not selling into an old low or buying into an old high, because that is usually a signature of a reversal. So that's why after this expansion, price then retraced lower into a discount before then continue higher. If you have your traded ordered into the best potential scenario being this low, you would then be stopped out on the Tuesday candlestick for this week. As we can see with Tuesday, then making this high at it. Look at it. Just look at it, right? With Tuesday at 3, we have news, right? Look at this candle at Tuesday. A bullish up close candle, taking the previous week high. Let me just clean these drawings. And that's immediately followed by what? By lower prices. So everyone that's trading the pattern of previous week high to lower prices, like this classic type of trading, right? Or everyone that is shorting at the sell side pool, but it's like the market is joking with you and is like making fun of you. How can you sell right here perfectly into that old low where a million sell orders are right here resting for breakout orders to enter? It gives the breakout that cookie, like giving a kid bread and then taking away from it. It gives them that them cookie lower prices, which is actually a discount, and then higher prices on the upside, and they are all taken out at 9 o'clock. After big bullish candlestick from Tuesday, retracement on Wednesday retracement, another leg lower, equal lows created with Thursday, another leg on the Friday high of the week, reversal closing the week. What do I believe? I can see lower prices. I can see lower prices, especially because of this Friday reversal candlestick. This is a Friday reversal candlestick. Yes, I can also see higher prices into this breakaway gap, but it can be left untouched. Right now, we are also in a position where I'm not sure what is going to happen next. So we have to see because there is actually a lot of sell side here, buy side here resting. So I think that's it. And yeah, I'll be uploading this. Hope you enjoyed.